Get ready because the crypto world is absolutely exploding with news, and you're getting it first on Bitcoin Bulletin. We've got seismic shifts in the market that could redefine your investment strategy, major players making bold moves, and trends that are setting the stage for what's next. The pace is furious, the stakes are high, and if you're not plugged in, you're missing out. We're diving deep into a potential altcoin season that's heating up faster than anyone predicted, with institutional money flowing into assets beyond just Bitcoin. This is a game changer you need to hear about. Plus, a massive milestone has just been hit in corporate Bitcoin adoption that is simply staggering. We're talking about over 1 million Bitcoin now held by public companies. That's a number that redefines mainstream acceptance. You absolutely have to hear the details on this one. We're also tracking significant strategic reevaluations happening right now in major digital asset firms that could have ripple effects across the entire market. Understanding these shifts is key to navigating the evolving landscape. And in a surprising turn, a well-known automotive retail company is making a bold play into a completely new and potentially lucrative sector. You do not want to miss these updates. Hit that subscribe button and ring the bell so you're always in the know. The altcoin surge is here. Prepare for a significant shift in the cryptocurrency landscape as the Altcoin Season Index climbs, signaling a potential boom for digital assets beyond Bitcoin. For months, Bitcoin has largely dominated the crypto conversation and market share, but new data suggests a powerful rotation is underway, driven by institutional capital and a renewed appetite for higher reward assets. Bitcoin's market dominance has dipped from 65% to a mere 59% in recent months, a critical threshold that historically precedes periods where altcoins significantly outperform Bitcoin. This isn't just a speculative blip. It's a trend backed by substantial capital movements and evolving investor sentiment. The momentum behind this emerging alt season is fueled by several key factors. Firstly, there's a noticeable increase in liquidity within the broader crypto market, making it easier for investors to allocate capital across a wider range of digital assets. Secondly, institutional investors, who were once primarily focused on Bitcoin, are now diversifying their portfolios. Ethereum ETFs, for instance, have seen a remarkable surge in weekly inflows, reportedly reaching nearly $3 billion, eclipsing Bitcoin's own ETF inflows during the same period. This indicates a growing confidence in other major cryptocurrencies and the underlying technologies they represent. Currently, altcoins collectively account for approximately 41% of the total cryptocurrency market capitalization, a clear indicator of their strengthening position. The narrative for altcoins is also evolving beyond pure speculation. We're witnessing a pronounced shift towards utility-driven projects that aim to solve real-world problems. Decentralized finance, DeFi platforms continue to manage billions in assets, showcasing the robust demand for decentralized financial services. Similarly, the burgeoning field of decentralized artificial intelligence, AI, is integrating machine learning with distributed computing, opening up new avenues for innovation. Layer 2 scaling solutions, particularly for Ethereum, are gaining significant traction, processing millions of daily transactions efficiently and cost-effectively, which is crucial for widespread adoption. Furthermore, the trend of tokenizing real-world assets, RWAs, onto blockchain infrastructure is gaining momentum, bridging traditional finance with the digital asset space. This diversification of utility is making the altcoin market more mature and resilient. Institutional adoption is also extending to less common altcoins. For example, Japanese firms like Yumi are making substantial investments, such as $17 million in XRP, viewing it as a critical network asset underpinned by real financial demand. They also recognize Bitcoin as a globally universal asset, demonstrating a sophisticated approach to digital asset allocation that acknowledges the unique value propositions of different cryptocurrencies. Historically, alt seasons have been periods of explosive growth, with the 2020-2021 cycle seeing Bitcoin's dominance plummet, while projects like Ethereum and Cardano delivered triple-digit returns, and meme coins like Dogecoin experienced astronomical surges. While the potential for high returns remains, the increased volatility also presents significant risks, especially for investors who are not prepared. This current alt season appears to be built on a more solid foundation, bolstered by increasing regulatory clarity, genuine technological advancements, and a growing number of businesses incorporating crypto into their operations. Companies are increasingly allocating between 1% and 10% of their profits to cryptocurrencies, with approximately 84,000 BTC purchased by businesses in 2025 alone, diversifying their treasuries beyond traditional assets. Audience impact. Analysts are closely watching the Altcoin Season Index, with many predicting a sustained period of growth for digital assets beyond Bitcoin, while cautioning investors about the inherent volatility and the need for robust risk management strategies. But is this just a fleeting trend, or the dawn of a new crypto era? Stick around, because next, we're revealing a monumental milestone in corporate Bitcoin adoption that changes everything. Corporate Bitcoin reserves hit 1 million BTC. In a landmark achievement that solidifies Bitcoin's position as a mainstream corporate asset, publicly traded companies have collectively surpassed the 1 million Bitcoin mark in their treasuries. This monumental milestone represents a significant validation of Bitcoin's potential as a store of value and a strategic hedge against inflation and economic uncertainty. The surge in corporate adoption, which has nearly doubled in just 6 months, spans a diverse range of industries, from technology giants and financial institutions to mining companies and even traditional retailers. The driving force behind this trend has been the pioneering strategy of MicroStrategy, now known as Strategy Inc. The company, under the leadership of Michael Saylor, has amassed an astonishing 628,946 BTC, valued at approximately $73 billion as of August 2025. Strategy Inc.'s aggressive accumulation, famously including periods of purchasing Bitcoin at a rate of $1,000 per second, has provided a compelling blueprint for other corporations looking to diversify their balance sheets. Their success has inspired over 150 public companies to follow suit, transforming Bitcoin from a niche digital asset into a recognized component of corporate treasury management. The adoption wave is not confined to a single sector. Tech companies like Block and financial institutions such as BlackRock, Intesa Sanpaolo, and Virtu Financial have integrated Bitcoin into their holdings. The cryptocurrency native space has also seen significant accumulation, with companies like Marathon Digital Holdings and Riot Platforms expanding their reserves. Mining firms, including Bitfarms and BitcoinWell, are also participating actively. This broad-based adoption signifies a fundamental shift in how businesses perceive and utilize digital assets. According to industry experts, this adoption is still in its nascent stages. Many major firms are still in the process of deploying their capital into Bitcoin, suggesting that current holdings represent only a fraction of the potential future accumulation. Public companies currently hold nearly 4.5% of Bitcoin's total supply, a figure widely expected to increase substantially. The allure of Bitcoin's performance against fiat currencies is a key motivator, driving more public firms to consider it as a significant asset for their balance sheets. Several prominent companies are leading the charge. Marathon Digital Holdings holds an impressive 50,639 BTC, while 21XXI, led by Jack Mallers, is set to hold 43,514 BTC. Bitcoin Standard Treasury Company, founded by Bitcoin pioneer Adam Back, is preparing to launch with over 30,000 BTC, backed by a substantial $1.5 billion in funding. These strategic moves highlight the growing institutional infrastructure being built around Bitcoin as a legitimate asset class. Even companies outside the traditional tech and finance sectors are embracing Bitcoin. Retailers like GameStop and Tesla have added Bitcoin to their portfolios. Tesla, for instance, holds 11,509 BTC, with CEO Elon Musk indicating a willingness to expand these holdings. Notably, Trump Media and Technology Group has also acquired an estimated 15,000 BTC, demonstrating the asset's growing appeal across diverse business landscapes. This widespread adoption signals Bitcoin's transition from a speculative bet to a mainstream financial instrument. Looking ahead, the potential inclusion of Strategy Inc. in the S&P 500 index could act as a major catalyst for further institutional adoption. Analysts predict that such a move could trigger billions of dollars in index-related Bitcoin purchases by passive investment funds, significantly increasing Bitcoin's exposure within traditional investment portfolios. Strategy Inc. has already met key criteria for index eligibility, making its potential inclusion a closely watched event that could further validate Bitcoin's role in corporate finance. Audience impact. This milestone is being hailed as a pivotal moment for Bitcoin adoption, with many analysts predicting it will accelerate further institutional investment and potentially lead to broader market acceptance. But as corporate giants embrace Bitcoin, are digital asset firms reassessing their own strategies? We've got insights into major strategic shifts happening right now. Digital asset firms undergoing strategic reassessment. In the rapidly evolving digital asset landscape, major firms are undertaking significant strategic reassessments regarding their exposure to Bitcoin and Ethereum. This period of introspection is driven by shifting market dynamics, regulatory developments, and a broader understanding of risk management within the volatile crypto sector. The focus is increasingly on optimizing portfolios to align with long-term growth objectives and to navigate the complexities of evolving investor demands. These reassessments are not about abandoning cryptocurrencies, but rather about a more nuanced approach to portfolio allocation. Firms are scrutinizing the specific roles Bitcoin and Ethereum play within their broader strategies. Bitcoin, often viewed as a digital store of value or digital gold, continues to be a cornerstone for many, particularly in the context of treasury reserves and inflation hedging. Ethereum, on the other hand, is increasingly recognized for its foundational role in the decentralized finance, DeFi ecosystem, smart contract capabilities, and its growing institutional appeal, especially with the advent of Ethereum ETFs. The reevaluation also involves a deeper dive into the operational and technological aspects of these digital assets. Companies are evaluating the efficiency of their current infrastructure, the security protocols in place, and the potential for innovation within their respective ecosystems. This includes exploring Layer 2 scaling solutions for Ethereum to enhance transaction speeds and reduce costs, as well as staying abreast of developments in Bitcoin's Lightning Network for faster, cheaper payments. Furthermore, regulatory clarity, or the lack thereof in some jurisdictions, plays a crucial role in these strategic decisions. Firms are adapting their strategies to comply with existing regulations while also anticipating future frameworks. This may lead to increased focus on compliant products and services, potentially influencing the types of digital assets and the strategies employed for their acquisition and management. The goal is to build sustainable business models that can thrive in both bullish and bearish market conditions while adhering to compliance standards. The market's increasing maturity is also prompting a shift from pure speculation to a focus on sustainable utility and adoption. Firms are looking at assets with clear use cases and strong development communities. While Bitcoin and Ethereum remain dominant, this reassessment might also involve exploring other promising sectors like decentralized AI, tokenized real-world assets, or specific DeFi protocols that demonstrate robust growth and real-world application. This strategic recalibration is vital for maintaining competitiveness and investor confidence. By proactively adapting to market changes and regulatory environments, digital asset firms aim to position themselves for long-term success. The ongoing dialogue within the industry suggests a trend towards more sophisticated portfolio management, risk diversification, and a deeper integration of digital assets into mainstream financial strategies. Audience impact. Industry observers note that these strategic shifts by major digital asset firms could signal broader trends in institutional investment and influence the development of new financial products and services. Now, shifting gears entirely, we're looking at an unexpected move from a company known for something completely different. Get ready for this surprising diversification. Automotive retailer drives into Bitcoin mining venture. In a move that has surprised many in the financial and automotive sectors, Cango Inc., a prominent automotive retail service platform in China, has announced a significant strategic diversification into Bitcoin mining. This unexpected venture marks a bold step for the company, aiming to tap into the growing cryptocurrency market and potentially unlock new revenue streams in a volatile yet potentially lucrative industry. Cango Inc. has historically focused on providing financial and operational services for the automotive industry. However, the company's recent Q2 2025 earnings report revealed not only its financial performance, but also this ambitious pivot towards cryptocurrency mining. This strategic diversification is a clear signal of the company's intent to explore new avenues for growth and revenue resilience in an increasingly dynamic global economic environment. The decision to enter Bitcoin mining is a significant undertaking, requiring substantial capital investment in specialized hardware, energy infrastructure, and technical expertise. Bitcoin mining involves complex computational processes to validate transactions and secure the Bitcoin network, rewarding miners with new Bitcoin. The profitability of mining is heavily influenced by factors such as the price of Bitcoin, the cost of electricity, and the efficiency of mining hardware, as well as the overall network difficulty. For Cango Inc., this move into mining could be seen as an effort to hedge against potential downturns in its core automotive business or to capitalize on the perceived long-term value appreciation of Bitcoin. The company's financial reports suggest a focus on assessing revenue resilience and exploring long-term growth potential, indicating a strategic approach to integrating this new venture into its overall business model. The success of this diversification will depend on Cango's ability to manage the operational complexities and market risks associated with Bitcoin mining. This venture also highlights a broader trend of traditional companies exploring opportunities within the digital asset space. While many have focused on direct investment or offering crypto-related financial services, Cango's entry into the mining sector is a more direct operational involvement. It suggests a confidence in the underlying technology and the future prospects of Bitcoin as a digital asset. The company's Q2 2025 earnings performance will be closely watched, not just for its traditional automotive services, but also for the initial impact and outlook of its new Bitcoin mining operations. Investors and industry analysts will be keen to understand how Cango plans to manage the energy-intensive nature of mining, secure competitive electricity rates, and navigate the regulatory landscape surrounding cryptocurrency operations. Audience impact. Market watchers are intrigued by this bold diversification, with many speculating on the potential impact on Cango's stock performance and its ability to successfully integrate mining into its established business model. That's a wrap on our top stories today, but before you go, let's do a super quick recap of everything we covered. And that's a wrap on today's Bitcoin Bulletin. We saw the Altcoin Season Index surge, signaling a massive shift beyond Bitcoin. Public companies shattered the 1 million BTC milestone, cementing Bitcoin as a corporate powerhouse. Digital asset firms are strategically reassessing their portfolios, and Cango Inc. is surprisingly mining Bitcoin. Don't forget to like this video, subscribe for all your essential crypto updates, hit that notification bell, and tell us your thoughts in the comments below. You can also follow us on all our social channels for more real-time news. We'll see you in the next one.